All right, guys, it's Paul Singh, the market speculator with bullsonwallstreet.com. Today, we're going to revisit the rubber band oversold bounce setup with the oil trade. This is a live trade we took. Originally, I did this post here where we talked about the entry and we had taken our first profit. Now we're completely out of the trade. So let's review what happened here, how it played out, the way we traded it. Remember, for the rubber band oversold bounce, we're looking for extreme oversold levels, the key entry signal, volume pattern, and the exit strategy. That's what we're focusing on here. These are the 4 points where most traders trading this make their mistakes. And we talked about this before. It is one of my most profitable setups, but it is also one of the setups that people can really mess up. And part of that is, it is a counter trend trade, so you have to be very precise. You have to really key in on the entry signals here and not just buy because a stock is oversold. We always hear about the term never catch a falling knife. Part of it is true, part of it is not. If you're just guessing, yes, you're going to get crushed doing that. But if you know what to look for, this can be a very successful pattern for you to trade. So let's review here. First of all, let's look at what happened with the trade. UCO here, we took 2,000 shares at 8.29, got out with an average entry of 10.54 on 8.18. Now that's not the entry, the exit, sorry, the exit here. Now that is not the one exit. We took two exits here. So one was at 10.30, one was around 11. That averaged out to around 10.54 here, $4,500, 27%. So a really good trade. Got us right there around 50% on the year. So let's review here. First of all, the entry. Now this is the oversold condition we're looking for here. So if you see here, UCO had been at a high here of about 14, and UCO is the double leveraged ETF. You can use USO, not volatile enough for me. Actually, this is a double leverage. So it was close to about 15 here and had come down all the way to about 790. And through this period here, there were a lot of spots here where people were taking guesses. We didn't take any shots in here because there was really no strong reversal signal. We had a couple of green days, but they didn't amount to much. Now, look at the difference in character on the day we entered compared to some of these other spots here. We got, first of all, it's very oversold. We had extreme stochastics here, close to 90, and usually we're looking at 70 for those levels. So we got that extreme condition here on the oversold level. And sorry, we're looking at the bottom play here. So we had extreme levels at about 7 here, which is what we're looking for, and then we're going to look for the entry signal. And we got that here with this kind of bullish engulfing candle on a lot of volume. So we talked about the entry signal and volume, and we got that here. You can see here for the past month, volume had been pretty low, and if it did peak, it was usually to the upside here. And we finally got a day of accumulation rather than distribution on this reversal signal. So that was our entry here. Now it reached all the way down to 790 and we entered at 830. And the question I always get when I do this is, is this bad value? Why are you buying at 830? Why didn't you buy at 790? The reason is at 790, we didn't know. It could have been one of these days here. But once we get that reversal, that's our clue to get in. Now we took our first exit here at about 10:30. And this is what I normally do. It's very hard to time the exit. So I look for logical spots to exit to take that first profit. And we could see here, we had a range here around 10:30. We were getting extended. So I felt like that was a good spot in here to take that first exit. We had about 3-to-1 or 4-to-1 on the trade at this point. So we took that first profit. Then we took that second profit here at about 11:15, somewhere in there. Maybe not quite 11:15. I don't remember exactly what it was, but it was above 11 here. I think it was 11:10. And the reason we took it here is, again, we were getting very extended and we were coming into these key moving average. My thought process here was, I'll take the rest off here. We've got a fantastic gain here. And if we can get back up over these moving averages, these key levels here, we can always re-enter. Trading is not like baseball where you take your pitcher out and you can't put him back in. It's more like football. Your quarterback is hurt, you take him out, you can throw him right back in anytime you want. So that's the idea here. Never think you're getting out and the trade is over. You can always get back in. We happen to time it very well at these moving averages here, and you can see how oil has pulled back since. Now, moving forward here, we're not done with oil. It's still in this trend here. They don't go in a straight line. They pull back and then break out again. So if oil does get back over these moving averages, I will have no problem getting back into the trade. But for now, we're out of oil. We'll be looking to enter here. This was the rubber band oversold bounce setup. A really nice trade here. One of our bigger wins on the year. And we're doing a lot of these live trades here. We did the BRZU trade. I am still in Netflix here. Now we detailed the entry on Netflix. This was a gap reversal here, and it's playing out nicely here. The entry was in the upper 94s. We're at 97 now, and we're going for 100 as our target. I'll send out another video here when that trade plays out, whether it ends up being a win or a loss, doesn't matter. And we've already reviewed the Brazil trade. Now remember, guys, these are all trade alerts. After I make the trade, I send an alert to Trade Report members. And if you want to sign up, you can go ahead and go to Swing Trade Alerts here, sign up for 1 month. It's only 99 bucks. And we also have this free weekly swing report you can join here. And every Monday morning, you get the weekly trade report, which will set up your week for you. And that's free, totally free. A lot of free blog posts here. Just go into blog here. You'll see a lot of Canal's blog posts, and all of my swing trading posts are in there. $99 a month. And if you like what you're getting here, you can go with the annual plan. 50% off instead of $1,200. You're going to pay $599. A really good deal. Let me show you real quick. Today's report, you can see there's a video that came out, 5 to 10 minutes long. A little summary of the video, but you really should listen to the video. I go in much more detail in the video. It only takes 5 or 10 minutes a day. And then you've got the focus list. Stocks we're looking to trade, reviews of the stocks we are in. And again, any trade alerts, any trades that I take, you'll get alerted intraday. There was already an alert today. I entered VIX to hedge what the Fed's going to do tomorrow. So that's it for this live trade review, and keep a lookout for the next Netflix review when I'm done with that trade.